Well, it all started in the 50s, the decade when Elizabeth II became the queen, Marilyn Monroe married Joe DiMaggio, and a 9-year-old boy in Hawaii got home one day from school and asked his dad to tell him how to get rich. The dad, unsure of what the answer actually is, told his son that he didn't know how to get rich and added that as a professor, he didn't really think about being rich, he just enjoyed teaching. The boy was Robert Kiyosaki, the author of the book, and this was his biological dad, or as he became known, the poor dad. A man who was a Stanford-educated PhD with no clue about finances, and even though he made pretty good money, just didn't know how to get rich. So the poor dad told his son that he should speak with one of his friend's fathers who was an entrepreneur, and like most entrepreneurs, he understood how money actually worked. And so the adventure begins, the journey in which rich dad and poor dad gave totally different advice. While poor dad would say, find a job and work hard and get promoted, rich dad would say, own the company. And when the poor dad would suggest, money doesn't matter, rich dad would disagree, money is power and it matters. The only thing that both rich dad and poor dad actually agreed on was, you should smash the like button on this video. So let's dig into it. Rich dad taught young Robert how to get rich, and these are the most important lessons from the book. Lesson number 1. Buy assets, not liabilities. In the very first lesson, rich dad told young Robert, rich people acquire assets. The poor and middle class acquire liabilities that they think are assets. But in order to fully understand this lesson, you must first know the difference between an asset and a liability. The explanation is, of course, pretty simple. Assets are resources that you own, things like cash, investments, real estate, and so on, while liabilities are things that you owe, meaning any bank debt, mortgage debt, taxes owed, etc. The more your assets outweigh your liabilities, the stronger your financial health. According to the author, if you want to be rich, this is all you need to know. It is the number one rule and basically the only rule. The goal is to buy things that generate income, aka assets, and avoid buying things that lose money over time or incur large expenses, aka liabilities. And while all of this might seem obvious to some of the most deceptive investments look like assets but are actually liabilities. For example, buying a house will most likely be your primary investment, but most people tend to buy more house than what they need or they can afford, which comes of course at a higher monthly expense. And what seems like a great asset at first ends up an even greater liability. So you see, it is not as obvious as you might think. Rich Dad suggests the real assets are things like businesses that don't require your active management, stuff like stocks, bonds, income generating real estate, and anything really that produces income, appreciates, and has a ready market. So remember, buy assets, not liabilities. Lesson number 2. The rich don't work for money. Money works for them. Did you ever dream of landing that extremely well-paid job in some big corporation? While the idea might be tempting, Rich Dad suggests it's a trap. He claims that having a high-income job means 2 things. 1, you must work to get paid, and 2, taxes will continue to increase as your income increases. And most people are like poor dad. They work 40+ hours a week to earn their salaries. If they deliver great work, they might be rewarded with a raise. Happy days, right? Not really. Because what really happens is that, as mentioned above, part of the raise will go to the government and the other part is usually used to buy stuff that people think will make them happy. As a result, poor dad and his friends end up trapped in the system, working 40+ years in a job they don't particularly like without ever getting a chance to enjoy the best things in life. So, are we all trapped? Not really. Because guess what? Rich Dad has a solution. The key to financial independence is having money that makes more money. You want your money to make enough money that you don't have to work anymore. The best way to understand this is to look at cash flows and how they're intimately connected to the assets and liabilities we just talked about. Poor dad got trapped in the rat race. His expenses matched his income, never allowing him enough left over to invest in assets. As a result, his liabilities are larger than his assets. On the other hand, Rich Dad's chart reflects the results of a life dedicated to investing and minimalizing liabilities. So you see, the idea is to escape the rat race and consider the idea of money earning money. And this takes us to the next lesson, lesson number 3. As we saw in the previous lesson, paying taxes is part of the rat race. The more money you make, the more taxes you pay. And we all remember in school being told the story of Robin Hood and his merry men. And while most people love the story of a romantic hero who robbed from the rich and gave to the poor, Rich Dad did not see Robin Hood as a hero. Instead, he called Robin Hood a crook. So Robert grew up hearing two conflicting stories. His rich dad would say government workers are a pack of lazy thieves, while his poor dad would say how the rich were greedy crooks who should be made to pay more taxes. And while both dads have valid points, Robert realized that the rich don't play by the same set of rules. They used corporations to pay less tax. The idea is that when individuals get paid, the government takes a percentage of their salaries immediately, and with the remainder, the individuals can use to pay their expenses. And while you shouldn't treat this as an actual tax advice because it's not, it may be a good idea to see a professional lawyer or an accountant who will help you understand how you can reduce your taxes through corporations. And lesson number 4, overcome your mental obstacles. After all the lessons he learned from both Rich Dad and Poor Dad, Robert managed to get rich. And when he looked back at his journey one day, he realized that he has never met anyone who really likes losing money. And in all his years, he never met a rich person who never lost money. But funny enough, he has met a lot of poor people who never lost a dime because they never invested. According to Rich Dad, there are 4 main reasons why people would not invest. Number 1 is fear. Fear of losing makes you play safe. It's what makes you put your hard-earned money into a savings account that generates nothing instead of investing. Now, what you need to realize is that every single rich person has lost money. Winning requires being unafraid to lose, so drop the BS and go big. Another reason is plain old laziness. Some people feel developing financial intelligence is just too much hassle. Learning about the stock market takes time, and learning about crypto probably takes twice as much. But let me ask you this question. Would you rather put in some hard work now and enjoy decades of a better life, or suffer through the rest of your life on the rat race? Another one is bad habits. As the saying goes, your habits will determine your future. The only way to get a body like Arnold Schwarzenegger is to get into the habit of going to the gym. And if you want to become the best swimmer in the world, you get into the habit of swimming every day. And the same applies to your financial health. If you don't create positive habits, you'll never get anywhere. And last but not least, arrogance. As the author calls it, arrogance is ego plus ignorance. No person knows it all. That's a fact. That means there will always be someone who knows things you didn't. Be smart. Welcome new ideas. And when those new ideas add synergy with your other ideas, you have unique knowledge. And right now you're probably super motivated. But guess what? You cannot pay your bills in motivation. So let's talk application. How do you apply all this knowledge in a step-by-step manner so you can actually start seeing results? Because reading the book or watching the summary, fantastic. Applying the information is what's actually gonna change your life. So let's talk about step by step. I'll see you in the next video. Click right here.